The treasurer is the financial advisor of the club and serves as the custodian of all club funds. In this role, there are many duties relating to operating the business of a Sertoma club, but at the very most basic level, the treasurer is there to track and report all money coming in and out of the club. Keep in mind that while your Sertoma club is a voluntary entity, the IRS and other legal and regulatory bodies view it as a business. Therefore, the finances must be treated accordingly. This training is designed to help you with the basics of these responsibilities. The Sertoma Club Treasurer has 4 main responsibilities: to structure and report on the budget for the fiscal year, to account for all revenue and expenses for the club, 2, with the rest of the board, ensure appropriate use of funds, both operational and sponsorship, and to report information to members, the board, the community, Sertoma, the IRS, and any other required entities as requested and/or required. It is vital that a club's leadership realize they are operating a business, and without the income derived from member dues, the organization will suffer monetarily, perhaps even to the point of failure. As such, club officers, especially the treasurer, need to understand that charitable funds must be held and accounted for in certain detail for reporting purposes. The IRS requires that all public charities be able to account for the revenue and expenses generated as an exempt organization. This must be made available on demand to the IRS, Sertoma headquarters, and others. Clubs must also be able to show how charitable revenues are used for their exempt purpose. We will dive into this a little later in the presentation. As you think about your club as a business, there are some very basic things that must be done in your setup phase. That starts with the EIN, your Employee Identification Number. Each club is required to have an EIN, whether you actually have employees or not. It is used by federal, state, and local governments, as well as the banking industry, to formally identify a business entity. The IRS uses this number along with a report from Sertoma to determine if you are covered by the organization's tax exemption. So without it, your club cannot be legally recognized as a tax-exempt entity. Clubs must apply for their EIN themselves, as Sertoma cannot obtain one for a club. This may be done by mail, phone, fax, or the web. You can find additional guidance on this topic on pages 3 through 5 of the Treasurer's Manual, which is available for download at members.sertoma.org. As we mentioned, your EIN number is required to secure your IRS tax exemption. Sertoma is a 501c3 organization, which enables our clubs to accept specifically allowed gifts and donations that are tax deductible to the donor. We are allowed to maintain this exemption to aid defined populations as the need arises, and for other qualified charitable or education purposes. All fundraising involving any type of tax-deductible gift, most corporate matching gift programs, and in most states, all charitable gambling requires the organization to hold a 501c3 status. Registration doesn't stop with the IRS. Your club should also be officially incorporated as a not-for-profit business in your state. Incorporation protects volunteers from liability issues related to club activities. Many states, and in some locations, even counties and cities, also require registration by all not-for-profits doing fundraising from the general public. As treasurer, you should work closely with the club secretary to make sure that your club has all appropriate and up-to-date registrations required. You can find more information on these requirements by contacting the Secretary of State and/or the Attorney General in your state. Now, as with any business, you're going to have some primary financial obligations you must meet. It is the responsibility of every Sertoman club to meet these obligations to Sertoma and, if required, to their region. Here's a quick look at the 4 major types of dues or fees your club is responsible for. First, membership dues are charged to individuals and to clubs, as both are recognized as Sertoma members. Club dues are billed directly to the club each July 1st in a fixed amount of $175. Clubs are also responsible for collecting individual member dues. These are billed by Sertoma to the club's account quarterly in July, October, January, and April. Region fees may also be assessed quarterly. In the case of both individual member dues and region fees, the billing is based on the number of members on file at Sertoma as of noon Central Time the last business day of the previous quarter. These fees are assessed by the region, so talk with your regional director for billing process and amounts. The Sertoma processing fee is charged for each new member who is added to the club's membership roster. The fee does not apply to transfer members, members who rejoin within 90 days of their lapse, or to reinstated life members. Finally, there is a club application fee that may be established by each club. It can help clubs cover things like materials and meals. Some clubs will choose to waive this fee if there's a concern of financial imposition. It is important to note that all dues and how they are calculated are authorized by the Sertoma Board of Directors and cannot be waived or adjusted without board action. There are repercussions when a club fails to meet its financial obligations to Sertoma. When a club becomes not in good standing, meaning that their account has carried a balance of at least $50 for 60 days, or the club has failed to provide required reports, clubs are no longer able to use the group tax exemption, the club and its members lose voting rights, and the club is not allowed to participate in most Sertoma programs. Any club that is not in good standing for 4 consecutive quarters is subject to charter revocation by the Sertoma Board. The standing is authorized by the Sertoma bylaws and is expected by the IRS as part of our group exemption. The IRS requires that all subordinate organizations be in good financial standing with the parent organization to share its 501c3 status. Let's go quickly through a few other financial obligations. All clubs are required to have insurance that covers members and event participants. Sertoma extends blanket general liability insurance to all clubs in the U.S. and Canada. Cost is prorated based on the number of members on file when the policy renews and is typically billed to clubs in September. You can get full details on this program on the Sertoma website. It's also recommended that clubs purchase a bond and possibly directors and officer coverage on the board of directors for decisions made for the club. This can be done through a local agent or Sertoma's insurance broker. And finally, sales tax is a state-determined function and cannot be waived with only a tax-exempt status from the IRS. A club must pay state sales tax unless it obtains an exemption from the individual state in which it resides. Now on to annual reporting. An audit should be performed at the end of each fiscal year, whether conducted by an internal club committee or an outside financial representative. The treasurer must make all documentation readily available throughout this process. The audit should be completed prior to filing the club's tax return. This federal tax return must be filed annually by November 15th. If the club fails to file, it is subject to significant penalties, including fines and even imprisonment. Clubs will be using Forms 990, 990 Easy, or 990N, depending on its gross income. A common mistake made by many is not including dues, including any national dues the club collects, even as a pass-through to the HQ office, in the gross receipts test. Dues are considered income by the IRS and must be included in this calculation. You can find out more about this and other federal filing requirements on pages 8 through 13 of the Treasurer's Manual and by visiting irs.gov. It seems like common sense to say that each club must have a bank account and that it should be assigned with the club's EIN. Some clubs may choose to have 2 accounts, one for operations and one for sponsorship. All expenses for operating the club should be paid out of the operations account, while fundraising, charitable distributions, and program services are paid out of the sponsorship account. Best business practices dictate that checking accounts should have 2 signatures on file at the bank to protect the club and the treasurer. All payments, including charitable distributions, should be made by check for an audit trail. Each year, prior to the beginning of the Sertoma fiscal year on July 1st, the incoming treasurer will prepare a balanced budget for the coming fiscal year. A budget is a projection of all expected revenues and expenses for the club. It can be as detailed as the club wishes, but must at least show the major categories of revenues and expenses. Once approved by the club board, changes in the total revenues and expenses for each overarching category should not be authorized without an adjustment to the budget vote by the club board of directors. Revenues are one part of your budget. There are 3 revenue sources to consider here. Dues revenue is the money received from Sertoma members. Investment and savings earnings include the revenue received from earnings off of money the club has saved in savings accounts, CDs, or stock and bond investments. Both of these types of revenue can be used towards operating costs. Finally, you have revenue received through fundraising, direct gifts, and grants. These contributions may or may not be tax deductible to the donor, so it's important that clubs legally and appropriately track and report fundraiser revenue. Charitable gifts may be wholly, partially, or non-deductible. Gifts of cash or other items can be eligible if the donors do not receive any service or item of value, meaning $8 or less, in return. Gifts become partially deductible when the value of a service or gift affects the amount of the donation. For instance, a donor may pay $100 to attend a dinner that has a stated market value, not necessarily an actual cost, of $40. This means that the donor can only claim $60 as a donation. Non-deductible gifts are those where the IRS has determined that the fair market value of an item is the amount of a gift. For instance, a club may sell holiday trees for $50 when they only paid $25 for them in the first place. In this case, there is no deduction as the IRS considers $50 as the fair market value of the tree. Auctions are an exemption to this rule as the donor sets the price and can pay higher than fair market value accordingly. In this case, the club should provide a receipt with the fair market value stated to the donor. In general, it's important to remember that tax deductibility is determined by the donor's tax status. The club should never tell a donor a specific donation is deductible. Instead, they should state what portion of the gift is eligible for deduction consideration. You can read more on this topic on pages 15 and 16 of the Treasurer's Manual. There are also 3 types of revenue to track. Club administration and general expenses encompass the cost of running your club as a business. This would include things like Sertoma dues, state registration fees, insurance, meeting expenses, and more. Fundraising expenses are those that are related to fundraising activities, direct solicitation, and grant requests. The costs may be direct, such as printing or facility rental costs, or indirect, like liability insurance. Program service expenses and charitable distributions are perhaps the most important category. These tell you how the net proceeds from the fundraising activities are used to support the charitable purpose of the club. Clubs may choose to budget net proceeds from each event to a specific cause or program, or can pool all net proceeds and make granting decisions based on total funds available. It all depends on how the fundraising program is structured. This is also where things like the annual fund donations, endowment contributions, and any expenses on directly ran community programs should be budgeted. Note, charitable funds cannot be used to pay things like operational expenses, dues, or meeting costs as they are not part of the charitable purpose. By now, you are hopefully starting to understand that your club really is a business, and as such, there are reporting requirements it has to meet. These reports require a time commitment, but it's critical that you, as treasurer, maintain club records appropriately. This responsibility makes yours one of the most important roles in a club. The good news is that, if maintained on a monthly basis, the time involved in preparing these reports is manageable by a volunteer officer. First, you have your bank statements. Everyone knows what these are. Just keep in mind that statements should be reconciled to the checkbook upon receipt. Financial statements are to be reported at each board meeting and should show a comparison to budget on all income and expense categories. They show where your club stands against projections. Finally, the accounts payable and receivable report is a detail of any outstanding monies not yet paid or received. You can find Excel templates and sample reports for these things in the Club Resources section of the Member Center at sertoma.org. Finally, let's take a look at the management of your club's charitable funds. Club fundraisers come in many forms, but they all share some common elements. You're going to have your expenses. Your direct expenses will include anything associated with the generation of revenue from a specific event, including printing, facility rental, food, paid labor, insurance, postage, and more. Direct expenses are covered by the event's gross proceeds. The resulting balance is the net proceeds, which are used to cover indirect expenses if required and to fund the club's charitable purposes. Indirect expenses are those that are incurred in the process of supporting fundraising activities, but are not directly related to a specific event. One example is recruiting and training volunteers who will support a number of fundraisers over the course of a year. You can recover indirect expenses from a fundraising activity, but unlike direct expenses, the IRS has not clarified which ones are how much. You can read more on this starting on page 20 of the Treasurer's Manual. Finally, we have the capitalized expenses. If the club acquired materials or equipment that is used for one or more events or activities, the cost should be prorated over the expected lifetime or usefulness of the items. Examples may include cooking equipment, trailers used only for storing and hauling equipment for fundraising activities, and gambling equipment used at fundraisers. Make sure to check out page 21 of the Treasurer's Manual to learn more about the allowable percentage of these expenses. How the club promotes a fundraiser determines the allocation of revenues for all expense categories or for charitable distribution. Before promoting an event, the club needs to plan in advance the need to allocate funds for expenses, as well as the expected charitable distribution. As a public charity, the Sertoma Club is responsible to the public to use the funds in an appropriate manner. We have provided some great examples of this on pages 21 and 22 of your manual. Fundraising dollars may be distributed to government agencies, schools, nonprofits, and in some cases, individuals. Distribution should be handled by check, and any restricted uses should be included in a letter accompanying the check. When dealing with individuals in particular, your club should be even more specific in use. Clubs should not write checks to individuals when possible. Instead, funds should be distributed directly to the medical provider, school, or other entity on their behalf. Scholarship payments should follow the same rules by sending funds directly to the school to be applied against the student's account. It is worth noting here that the IRS requires students who receive funds greater than education costs to report that money as income. Sertoma provides additional guidance on substantiation and disclosure requirements on pages 24 and 25 of the Treasurer's Manual. This includes things like quid pro quo, gifts of over $250, and deduction of volunteer expenses of $250 or more. One quick note on gaming. All states have different laws governing this area. Before a club decides to pursue any type of fundraiser that includes gambling, raffles, or bingo, they should check with the Office of the State Department or Attorney General for all required documentation, licensing, and the fee structure. Finally, financial evaluation of each fundraiser is key in determining if the event is a success. While some large fundraisers can have a negative return the first year, the following year should prove profitable if it is to continue. The club should evaluate the net effect, that is, the revenue minus expenses, to determine their value to the club in helping the community. An Excel spreadsheet and sample report are available for club use in the Member Center of Sertoma.org. This concludes today's training. Remember that help is available. We have published the Treasurer's Manual in the Member Center. Your Sertoma specialists, directors, and headquarters staff are also available to answer your questions and provide needed information. As we've mentioned throughout this presentation, you can find other training and resources by visiting members.sertoma.org.